Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? Oh, I'm just trying to help you make money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. When people in this business screw up, you got to call them out. Yet most commentators are reluctant to go there. This drives me nuts. I think we should approach this business with the same rigor that you use to examine, say, the NFL. Unfortunately, the stock market has a lot less accountability than pro football, which is a major reason why people have such a hard time making money. Even on days like today, where the Dow gained 188 points, S&P jumped 1.06%, and the Nasdaq surged 1.77%. Let me give you some examples of what I'm talking about with this lack of accountability. Last night, Cisco Systems, one of the largest companies in the world, the gold standard in networking, reported, and within a few minutes, the press universally condemned the quarter. The stock was instantly blasted in after-hours trading to the point where some trades were put on down $4 from the close. As someone who used to cover sports for a living and, of course, still covers business, I was shocked by this shoddy and ahistorical reportage. I followed Cisco since it came public 31 years ago, way back when John Mordridge was running the show. The key metric for Cisco isn't the earnings per share of the revenue, it's order growth, because order growth indicates future earnings. This quarter, the order growth was so spectacular, especially the long-suffering service provider business, that I figured anyone with a clue would focus on the dramatic turnaround in Cisco's fortunes. Plus, you saw some astounding growth from their software business. No. The press totally ignored the single most important data point, didn't focus on the software. They focused on the rearview mirror, and they got it completely and utterly wrong. Sure enough, the stock rebounded hard today, but there will be absolutely no penalty for the journalists who fake people out. It was an astounding misdirection play by an entire team of scholars. How about all this Kool-Aid drinking coverage of cryptocurrencies? Not long ago, I decided that I had to own some crypto. I've been recommending gold for years as a hedge against inflation. I think it's a good idea to put 10% of your portfolio in gold as a kind of insurance plan. I've been saying that since the show began. But as Bitcoin caught fire, I gave you permission to put half of that in crypto instead. Part of me bought into the idea that it's scarce and can't be created easily, which, like gold, makes it a good storehouse of value, perhaps even better than gold because it was so scarce. Maybe that was true not that long ago, but with the advent of so many different cryptocurrencies, it's definitely not true now. The scarcity value has all but disappeared. There are too many coins and no good way to differentiate the good ones from the bad ones. It's Gresham's law. Bad money driving out the good. However you feel about crypto as an investment, the idea that anyone takes them seriously as alternate currencies is pretty preposterous at this point after the last, say, 24 hours. Remember, something like Dogecoin was created as a joke. But the punchline is that Dogecoin's as legitimate as any other cryptocurrency because there's nothing backing most of these things anyway. But because there are so many crypto zealots, it's easier for people in the media to just keep their mouths shut. I'm not begrudging here. I made a great deal of money in Ethereum and Bitcoin, but I now think I just got lucky. And I am reviled for taking most of my crypto off the table and playing with the house's money. What's the matter with that? What about the ascendance of these people who want to talk up their two favorite stocks, the Wall Street bets mob? I'm all in favor of conviction, but GameStop and AMC? I mean, seriously? GameStop's been falling apart for years thanks to the rise of digital downloads. Sure, you can buy hardware at their stores, but you can also get it at Amazon or Best Buy. As for AMC, the joke's really on the supporters who allowed CEO Adam Aaron to keep selling stock in order to prevent his company from going bankrupt. What a cause! Of course, if you criticize these folks, they'll try to tear you to pieces, so there's never enough pushback. If an NFL team only ran two plays endlessly, they'd be torn to shreds, but not in this game. Here it's a bold strategy. Next, you've got the incessant criticism of Fed Chief Jay Powell for his statements that inflation is transitory. You got lots of money managers who want higher rates, and their opinions are taken as gospel, even though they've been wrong for ages. There's zero recognition that the monetary policy paradigm has shifted, and when you have shortages, they do tend to be self-correcting. Powell has no desire to repeat the mistakes of 1937, when the Fed tightened too soon and created a recession within the Great Depression. He knows that we're a long way from full employment. The jobless rate fell to 3.5% without meaningful inflation in 2019. He wants to get us back there. He cares that black unemployment is now almost 10%, and it was 5.5% in 2019. He wants it to be lower. What's so bad about that? Finally, nothing makes me angrier than the outrageous lack of criticism over what AT&T is doing to its poor shareholders. There was a man, he was named Randall Stevenson, former CEO. He decided that AT&T had to get into the entertainment business. Why? Well, he was convinced there were spectacular synergies among cell phones and movies and TV and news. He first bought DirecTV for $48.5 billion in 2015. Then 3 years ago, he acquired Time Warner for $85 billion. Now, I've gone through all the old clippings about why he went after Time Warner, and the explanations, frankly, they're dumbfounding. I defy you to come up with a single scintilla of rationale, especially since it was already clear that DirecTV was a huge bust. Stevenson left the company in April of last year. He didn't go empty-handed. He had a pension valued at $64 million, and he got an additional $27.6 million in deferred earnings. Once he stepped down, John Stankey took over as CEO, and he must have realized that AT&T, arguably the most indebted company in America, had to do something immediately to lessen the debt burden while maintaining the precious dividend that he knew his shareholders' base craved. He knew they craved it. People who own AT&T aren't chasing growth. They're widows, orphans, and grannies who need income. They're the least short-term, most long-term, and most trusting investors you could ask for, blindly trusting. But apparently AT&T needed to spend more money to stay competitive with T-Mobile and Verizon. So what does Stankey do? He sells Time Warner for $43 billion and a stake in a new company that will merge with Discovery, another network. Remember, his predecessor paid $85 billion 3 years ago for this thing. At the same time, Stankey, who had recently been encouraging people not to worry about the dividend, told you it was fine, goes ahead and slashes the dividend almost in half. He didn't say it point blank, but the release talked about how the payout would be pegged to cash flow. And when you do the math, that results in a dramatic slash of what most of the shareholders counted on. Of course, they wouldn't even call it a slash or a cut. They called it a resizing, as if it were some sort of suit. Listen, I'm trying to present this story as dispassionately as possible, and you know that. You know I'm not making incendiary charges here, because we've got something bigger than insults for these guys. Yep, tonight we're dusting off something I've rarely used in 16 years of mad money, and it's called the Wall of Shame. Honestly, I should put AT&T's entire board of directors on the wall, but they still have the chance to claw back some of Stevenson's compensation. So let's see what they do. Still, I've heard some of these guys talk about how the criticism comes from short-termists, people on trading desks who don't understand. What a joke. Nobody's less short-term than these poor, suffering, dividend-seeking investors. Randall Stevenson and John Stankey, welcome to the Wall of Shame. Thanks for nothing. I actually waited until a day when the stock was up. It rallied 68 cents because, unlike management, I didn't want to be complicit in destroying shareholder value. Here's the bottom line. When rich people question why their taxes are going up, when they wonder why they've gotten so unpopular, I want them to look at these two names. They are powerful, tough people who will defend their actions to the end, who are actually proud of their actions, or at least they act so. But there's no defense. There's no defense against stupidity or depraved indifference. And sadly, there's not much accountability either, other than the sting of the Mad Money Wall of Shame. I guess that'll have to do.